Joining us now for a first on CNBC interview is World Bank President David Malpass. President Malpass, it's good to have you back on the show. How tied to the inflation story and to what Powell is planning to do this year is your grim forecast for the global economy?
Hi, Sarah. The grimness is that developing countries have a very hard time in this environment. Both the inflation and the prospect of interest rate hikes really puts a burden on them. They're not getting the new investment that they need to create jobs, and it also means shortages. We're seeing them in the U.S., but it's worse abroad.
So 4.1% growth this year you see for the global economy, 3.2% in 2023, which is still not bad. It's still growth. Which areas of the world are you most concerned about?
That's true. Any real growth is good, except the population is going up rapidly in developing countries. So in many developing countries. So if you look at the per capita income, they need more growth than that. And also, it's really a two-track or two-tiered global economy where the U.S. and China are doing, and even now Japan somewhat, are producing growth, but there's not much left over. And so the big challenge is the people in developing countries, and especially the poorer ones, are being left further and further behind.
Does raising rates, David, in the developed world hurt that further, or is it a sign that growth in the developed world, is strong, which should help the developing world accordingly?
It puts pressure on the financial systems in the emerging markets, and we already see that in a third of the countries have already had to themselves raise interest rates. So that's a credit tightening going on in a region of the world that already didn't have enough credit. So the challenge here is, how do you reduce this inequality that's so prevalent in the world, with most of the assets and wealth going to people in advanced economies and the other people elsewhere not catching up? That puts strain on refugees. That puts strain on governments themselves. So we're seeing pressure throughout the developing world from inflation, interest rate hikes, slow growth, and just the prospect that it's really not going to improve very much in 2022. I'll mention education, where kids are falling behind because in some parts of the world, schools are still closed, which the data is really crystal clear on. That means they go backward in terms of literacy.
No, it's a huge problem, President Malpass. How do you propose we deal with it? Because in the U.S., at least, when it comes to inflation fighting, I mean, the mantra is the Fed has to do something about it. It's getting to levels we haven't seen in decades.
Yeah, since 2008, there's been this sea change in both fiscal policy, now with much, much, much bigger fiscal deficits as a percentage of GDP, giant amount of national debt. That really drains resources from the whole world because the U.S. government is just borrowing constantly, and that's true also of Europe and Japan. On the monetary policy side, it also means that the central banks are doing a huge amount of borrowing from the commercial bank system in the form of bank reserves in order to target a certain part of the credit market, the long end of the market. That's the end that's most used by corporates, by governments, and by big business. And that just doesn't leave space for the small business growth and credit that's really desperately needed. If you think about the supply chain problem, it really needs to be solved by small businesses doing the trucking, the distribution, the innovation that can get us back to a full supply chain. And it's not happening right now under current credit conditions, and those are going to get, I think, tighter.